Hello, everyone, and thanks for tuning in again for another episode of Wilson Weekly. I'm joined by ever charming Doc Wilson, of course. He's he's ready to give us an update on the market. Hey, Doc, how are you? What's happening?
Yeah, I'm very good. Thank you for that introduction. And yeah, this is the last week in February. We begin March on Saturday. Heads up to everybody. Look out for the My Housing Market house price report for February, which will come out tomorrow off the press, the day before the first day of the month. As usual, we are the first with the latest data and some interesting news there, but I won't preempt that at all because today we're going to look, as usual, to what's happened over the past week in terms of the property market, in particularly the drivers of the property market. It's a little bit dry today. We are looking at some economic insights, but of course we've had that interest rate cut last week, which was pretty exciting, and I'm sure mortgage holders are pretty excited about it. And I'm sure the housing market, if it could speak for itself in one voice, would be saying, yeah, we're excited too, because it acts to refuel, certainly puts upward pressure on prices. I'm not sure, those that don't have a trade in property, such as first home buyers, and those that are wanting to get into the housing market, such as tenants, wouldn't be that happy about higher prices. But we can get rolling, if you like, and have a look at this week's information. Of course, My Housing Market is our consultancy brand. We're about the current state and future prospects of housing markets. That's what we do every week, is bring you all the latest data, and we talk about what its implications are for the housing market. So if you're looking for insights, if you're about to make a decision or not, but you're interested to know what's happening here and now in the housing market, you'll get all that information every week here, completely objective. And our analytics are all about building that jigsaw puzzle, all those bits and pieces that come through every now and again or every week to understand what's actually happening in our housing market. So this week, week to Wednesday, February 26th. Goodbye, February. Hello, March. This is the last week of February, the second month of the year. I'm not really educating people with much there, am I? But we are really shooting through now. But we can certainly say that after, a real month of action, that's what February is, although it's still impacted by, a sort of a holiday distraction. But we can certainly understand what's happening in our markets to date, particularly when we look at those auction results, which we'll do at the end of the show as usual. So this week, our latest labour market activity out from the ABS last week. We'll look at the January labour market. Still very strong labour market. Not really much there the RBA could hang its hat on, not that they want to, in terms of needing an interest rate cut to stimulate our economy. Our economy is doing pretty well. In fact, our labour market's doing about as well as it's ever done. So that's good news. And some other data that I think is interesting is the latest average weekly earnings. So that tells us the average weekly earnings on a state-by-state basis over the 6 months to November. Interesting that it's quite strong results there for average weekly earnings. In fact, a lot stronger than the wage index data that the ABS released recently, which was a bit questionable because it was quite low. But the weekly earnings data certainly conflicts, because it's strong with what the wage earnings, it conflicts with what the wage index told us. And really, given how strong our labour markets we would expect to see upward pressure on wages growth and weekly earnings. We're seeing it with the weekly earnings data, but strangely, we're not seeing it with the wage index data. However, we will look at that. And also is important when we're understanding affordability, when we look at the comparisons between each state at the level of average weekly earnings. And as usual, we'll finish off with the latest weekly auction results. Did the interest rate cut affect the auction results? Early days, I know it wouldn't have affected sellers in the sense that they already had their properties scheduled to go under the hammer last week, so it wouldn't have made any difference. But it might have just activated a few buyers thinking, well, hey, I can afford to pay a little more because I'll get a lower interest rate. Or maybe I want to, be more I'm more motivated to buy because a lower interest rate typically means higher prices. So we'll see those results as usual at the end of the show. But yes, let's start off with the labour market. Yeah, the labour market is still strong, even though the headline is certainly labour market eases. How can that be? Well, let's have a look. So the labour market eased because the jobless rate, the unemployment rate seasonally adjusted, went from 4% to 4.1%. Okay, it's up. We had another big month for jobs growth. Another 44,000 jobs were created over January. That followed a 56,000 rise over December. But the reason we had a higher unemployment rate is because the number of unemployed was up by 23,000, which was an increase of 13,000 over the 10,000 the previous month. So that 13,000 increase in the number of unemployed offset the increase of 12,000, in the number of jobs created. Do you understand that? So that gave us, because the match between higher numbers of unemployed and higher numbers of jobs was just a little in favour of the number of unemployed. Therefore, we got an uptick in the unemployment rate. So, okay. But the real important statistic, as usual, was the participation rate. We speak a lot about the participation rate. And this is what makes this housing market so spectacularly strong, because it is, again, another record participation rate. Now, the participation rate measures the proportion of the potential workforce, so those that could work, that are actually working. So at the moment, over January, we broke another record for the highest participation rate that we've ever recorded. It was up from the previous month, which was the previous record, up to 67.3%. Western Australia, as usual, in terms of the state comparisons, had the lowest unemployment rate, just 3.5%. And again, talking about lower interest rates, that's only going to help the labour market in a sense, because lower interest rates give employers the opportunity to invest more, because they can pay less for their loans, and that means that they can hire more, and that means more searching for workers in our workforce, where we really, which is what employers are struggling to do, is to find workers going forward. So all good news in terms of the labour market. And look, one of the negatives in terms of the housing market is the labour market if it was weakening, because obviously high unemployment or higher unemployment and weak jobs growth is a problem for the housing market, because people get worried about not just losing their incomes, but they get worried about job security. No worries here. These numbers are strong. So there's nothing here that would indicate a impact on housing market activity. So let's have a look at the chart. You can see there, this is the long-term chart for the unemployment rate at currently at 4.1%. But look, this is very interesting, because it's exactly the same as where it was a year ago. So despite those high interest rates, whatever, that the Reserve Bank was so concerned about, our unemployment rate hasn't moved in a year. It's still the same. And as I said, we've now got record participation rate as well, which is a big tick for the strength of the housing market. And what's interesting is, if we go back way back to the early noughties, or the noughties, where we had this massive mining boom, very strong period of Australia's economic growth, we're not too far away. It was 4% then from what those very low results were back in that booming economy, driven particularly by our resource sector and export growth. So, in terms of the historical record, we're really trundling along the bottom in terms of a very low unemployment rate. And as I said, take that in the context of, as well, a record high participation rate. And there's just no arguing that this is a very strong labour market. And, even the commentary from the Reserve Bank last week was saying, hey, we're actually a little surprised at how strong the labour market is. Well, you shouldn't be, because that's a key to your analytics, and it is part of what your strategy is to keep full employment. And there's been no weakness really in our labour markets for some time now, and we're still performing very strongly. So here's the comparisons between each of the states. As we mentioned before, Western Australia has the lowest unemployment rate, 3.6%. Victoria, a little bit of an outlier there, 4.7%. It's interesting when we look at the state unemployment rate in Victoria, it's actually a lot higher than the capital city unemployment rate, the Melbourne unemployment rate. So it suggests perhaps the regions aren't doing quite as well as the capital is in Victoria. The rest are, around about the national number, 4% New South Wales, Queensland 3.9%, South Australia 4.1%. So good results there, and even Victoria at 4.7%. That's a relatively low unemployment rate. Jobs growth, this is interesting as well. No surprise, Western Australia leading the charge in the number of jobs created over the past year, up by 4.2%. New South Wales, a little bit of a surprise underperformer then. Again, sort of emphasising that the Victorian state data is a little different from the Melbourne data. The Melbourne has actually been the leader in jobs creation over the past year. So this, again, with a lower jobs creation number, sort of emphasises that the weakness in the Victorian economy isn't Melbourne, it's the regional areas of Victoria, because there's much stronger growth in Melbourne than there is statewide in Victoria. So some interesting insights there. So we mentioned average weekly earnings. So with such a strong labour market, and we have that, it's inarguable, we would expect pressure on wages and earnings, because, of course, if you know that you can get a good job around the corner, you're going to go to your employer and say, hey, I can get a good job around the corner, you've got to pay me more or I'm leaving. And employers know that if they have to attract labour, they've got to meet the marketplace, which means making higher offers in terms of salaries. And we're seeing that. We didn't see it with the wage index, the recent wage index, which only had an increase of 3.3% over the year, which is a sharp fall compared to where it was a year ago. In fact, a bit too much of a sharp fall when we're looking at sort of the econometric pattern. You don't expect to see these volatile outcomes in seasonally adjusted data, but we did see it. However, this is a correlating measure. So it's a similar measure, weekly earnings versus the wage index. So it's interesting just to compare the two. And here we see, firstly, the average weekly earnings for each of the states. So look at Western Australia here. No surprise how that it remains the leader in terms of average weekly earnings. And of course, this plays its way into housing market activity, because this is about affordability. Now, consider that Perth still has the lowest median house price of all the major capitals, and yet Perth, Western Australia, has the highest incomes, not just, but by a margin, a significant margin. And that means there's plenty of upside for those in the Perth housing market to borrow more, because they're actually earning more in relation to the prices they pay generally compared to the other capital city markets. So it shows you there's still upside for that Perth market. It's part of our analytics. It's part of what we look at when we're doing our forecasting. It's a reason why we would expect to see prices continue to grow in Western Australia, because they have such a strong affordability advantage going forward compared to the other states. This is interesting too. I mentioned the wage index data showed a 3.3% increase nationally over the past year. Look how strong some of these states, the annual weekly earnings growth has been, average weekly earnings. South Australia up by 7% over the year. Queensland up 5.9%. New South Wales up 5%. Victoria up 3.8%. Now, when we put that all together, I haven't put the national one in here, which I should have. It actually brings us to 4.5%. So average weekly earnings have increased by 4.5% over the past year, which is a strong result and what we would expect. And yet it is certainly in conflict with that 3.3% increase that we've seen in the wage index. So we'll have a bit of a closer look at that. But in terms of how strong the labour market is, this makes a lot of sense, to see strong earnings growth, over the past year, given how strong our labour market has been. And as I said, it sort of is in contrast to a surprisingly weak wage index outcome. But as the ABS mentioned over the September quarter wage index data, in its opinion, it had a lot to do with their measurement process with the national wage case, which was certainly well down when it was announced compared to the previous national wage case. And that's why they say the wage index was significantly lower. But anyway, it's a bit more understandable seeing average weekly earnings growth so strong, given, as we've just seen, how strong our labour market is. But the big picture is, in terms of the housing market, is there's nothing here to suggest that there's any issues that buyers and sellers would consider in terms of the labour market, job security, etc., and earnings that would cause any particular issue with demand for housing and supply of housing, or demand for housing specifically. So they're the numbers, our economic numbers, our performance for the economy over the past week. But nonetheless, these are our latest weekly auction results. So it is the last full week in February. Steady results in terms of the clearance rate. And that was actually another a good positive insight into the market's performance, because we had another surge in listings. And we expect this, as February advances, to see more listings coming into the market, because the market becomes fully engaged. And of course, a lot of the listings that are coming through were decisions that were made 6 weeks ago. And if we think 6 weeks ago, we're talking the middle of January. So it was still holiday mode for many. So we're still not seeing the full load of auctions, particularly higher priced auctions coming into the marketplace, which may affect our house price data coming through. But we'll wait till tomorrow to see that, see those results for February. So we really didn't see a particular impact from the RBA rate cut. Maybe not. But certainly we didn't see a real slowdown because of the surge in listings. And the big picture is it's still been a good start to the market this year. No signs there of a shakeout, particularly for Melbourne and Sydney. They've had good starts to the year. So here's the data. Last week in Sydney, 1,218 auctions. That's a lot of auctions. That's over the week to Saturday. Good clearance rate again in Sydney, considering big numbers of auctions, 75.6%. That is a seller's, a good result for sellers, where you're getting nearly 8 out of 10 properties offered selling under the hammer, and a little bit lower the clearance rate from the week before, but nonetheless, given an extra 200 auctions, a pretty good result. And what's interesting in Sydney, it's actually stronger than the same week last year, where nearly 200 more auctions and a higher clearance rate. And that was a strong start to the year last year in Sydney. So another good week for the Sydney market. So we can't complain about the auction results this year so far in Sydney. Similarly in Melbourne, so look at the numbers of auctions in Melbourne, 1,355 auctions. That's nearly double what we saw the previous week. And a clearance rate, despite that massive surge in auctions, because that gives more choice to buyers. So, sort of notionally, you would expect to see a lower clearance rate. But no, just marginally lower than the week before, close to 70%, 69.1, 71.7 the week before. And again, very similar. In fact, the clearance rate was higher, marginally higher than the same week last year. And our market started off strongly at this time last year. So again, this is a good result, early year result for Melbourne. Another good clearance rate, and similar to where we were a year ago. Brisbane clearance rates, just sort of getting back into that Brisbane mode, which is we really don't look at clearance rates in the same sense as we do at the other capital cities, because it has a different culture, the Brisbane auction market. Numbers were down in Brisbane, still a good week for auctions, and just under 40% clearance rate, and well down in terms of the clearance rate on the year before. But that was a very strong, a record year for auction results beginning last year in Brisbane. Adelaide, a lot more auctions in Adelaide, big rise, but the clearance rate actually stood up, and it was a little higher than the week before, but well down on the same period last year, where at the beginning of last year, we were just talking 80-90% clearance rates in Adelaide week after week. It was a remarkably strong market. And Canberra, has it turned the corner? We keep saying this. We keep asking this every week. Has the Canberra market turned the corner? Certainly a lot more auctions and a higher clearance rate. So there's some good early signs also for that Canberra market, which is tracking well above where it was a year ago. So if we look at the trends going forward, this is the Sydney monthly clearance rates. We're tracking in Sydney, good result early days, just below where it was for February last year, but tracking higher than where it finished last year and for most of last year as well. So, some good results there for Sydney. Good start to the year in February. Same story for Melbourne. It's higher than where it was at the same time last year. And it's also tracking well above, or certainly above, and maybe well above where it was over most of the months of last year. So good signs there for Melbourne to start 2025. Brisbane, as we said, had a very strong start last year. It was a record auction market environment in Brisbane. It's now back to sort of more of a normal Brisbane mode in terms of clearance rates. Prices are still growing in Brisbane, so it has a different relationship, the auction results, to actual underlying house price growth, but still tracking above where it finished last year. The Brisbane auction clearance rate. Adelaide, again, similar to the other capitals, higher than where it finished last year and for where it tracked for most of the year, but lower than where it was at the beginning of the year last year. And Canberra gives us some confidence, some optimism that the Canberra market may be starting to turn, but we've been saying that for a while now. We need to see clearance rates really a bit closer to 70% to be able to say that. But, it all takes small steps to start with in terms of a revival in the Canberra market. If you're looking for those auction clearance rates, every Saturday night at around about 6 p.m, you get the Capital City Snapshot on my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. If you're looking for the full national report, which includes the regional breakdowns for Sydney and Melbourne, as well as the top 10 sales under the hammer for each of the capital cities over the week, you get that at around about 9 o'clock on Sunday. If you've missed out on the latest weekly auction report from last week, there's a QR code which you can scan, and it will give you a link to a PDF copy of the latest weekend auction report. Now, just to finish off, as we usually do, here's our giveaway of the My Housing Market Infinity Suburb Data app, which allows users to track what's happening in each suburb in Australia that has data. There is the link, there is the QR code to get to the link for that fantastic app. You do have to get a password from Infinity to access the app. So our friends at Infinity will tell you how to do that. And here's a screenshot of the app. It is fantastic. You can filter for prices or rents. We filtered there for price. You can filter for the capital city region or the outside capital city region. We're looking here at New South Wales, Sydney region. And then you can filter for all the suburbs. We're looking at Blacktown. You can then filter for house, townhouse, or unit. We're looking at houses. And you can also look at, you can filter it for the number of beds. We're looking at a 5-bedroom house in Blacktown. And it's not just the median asking price that we have here. So this is the asking prices on a real-time basis. So you know what the market's asking at the moment for properties. It's not just the median. You also get the high and the low current asking price. So that tells you what the boundary between the median is, the high and the low, and also the number of properties that are for sale. You can do exactly the same thing as we've done here for the rental market for Blacktown or for any other suburb. So it has all the suburbs in Australia that actually have data. If there's no data, there won't be the suburb there. But it's a great way of doing analysis, just for your own interest sake anyway, of what's happening in the housing market on a suburb basis, not an overall capital city or regional basis. This is a suburb by suburb basis, and you can filter it for various different parameters. We've also added something lately for investors, and this with the same types of filters that we have for rents or prices. You can look at the top 10 yielding suburbs for each of the regions. Here we're looking at a 1-bedroom unit in the Sydney capital city region. And you can see they're the top 10 suburbs for yields. So it tells you where the yields are. It also shows you what the top average yields are. And you can see there it's around about 6.3%. The top 10 are averaging. So you can compare that with other capitals just to look for some advantages in terms of yields. As well as the top 10 yields, we also give you the vacancy rate for each of those top 10 suburbs. So you can understand what vacancies are like there. Also the number of properties for rent or for sale. So there's lots of information there for those that are wanting to take a scientific approach to analysis in the housing market on a suburb by suburb basis. And if you click on the suburb name there, it will take you to the map of the suburb. So you can actually see where these places are. So it's a great app. Get onto that. Get the password from our friends at Infinity. And it's a great addition to your decision-making tool sets for the property market. Next week, we're going to look at February home prices, which will be released tomorrow. The January inflation data, which was out today, and as usual, the latest weekly auction results. So if you want a copy of this week's report, there it is in all its glory, the QR code. You can take a scan of that, take a picture on your phone of that. It will give you a link to a PDF file of this week's report. So that's all from me. I only had one cough incident, so that's really good. and we've kept on keeping on. So I look forward to presenting all our information again next week, which will be our first week in March. So
It'll be exciting.
Easter. I hope you haven't bought Easter eggs yet, because there's still a way to go before that.
Thank you again, Doc. It's amazing, very insightful as always. Really looking forward to what the results would be, weekly auction results would be over the next few weeks, now that the interest rate has dropped. So see how that's tracking. The app is a powerful tool. So thanks again.
100%. All right. Catch you next week.
Sounds good. Thanks, Doc. Thanks, everyone.